We have Sarah Brown and Vin Gandolfo. So Sarah Brown is the co-program chair for this program, environmental underwriter and environmental division for the Great American Insurance Group. And then we have Vin from, who is an account executive broker, commercial risk solutions, professional services group for Aon Risk Services, the Northeast division. So they're going to bring some great content to us today. So I'll hand it off to them.
Great. Well, I appreciate the introduction. I'm going to let Sarah go first. We'll do a quick introduction of ourselves, who we are, and what the program's going to cover today. Want to thank everyone once again for joining. I know everyone's Zoom fatigued, and obviously these meetings we don't want to keep everyone too long, but we think we're going to cover a lot of good stuff today. So Sarah, I'll let you go first and do an introduction.
Hi everyone, I'm Sarah Brown. I'm an environmental underwriter with Great American Insurance Group. I've been doing environmental underwriting for about 5 years now, and I'll let Vin get a little more in detail what an underwriter does. But I joined EBC about 1.5 years ago, and I heard about it through Great American, just heard about their amazing presentations and events, and so I was super excited. And it goes in the realm of my history. I graduated with a Bachelor of Science in Environmental Studies, so it's right up my alley.
Great. I'm Vin Gandolfo, and I've been, I'm with Aon. I'm with our professional services practice. I've been with Aon for about 3.5 years, and I've also been on the Ascending Professional Committee of the EBC for, I want to say, about 2.5 years. It's been awesome putting on these programs. We were able to do one, I want to say last February, about project management, and this is the first time we're doing one about insurance. I know some of you are familiar with it, but mostly not. So it's going to be relatively high level, but we're hoping we can kind of teach you guys a little bit about the risk side of environmental and talk a little bit about that. In my time at Aon, I started with our environmental insurance group out of college, environmental services group, apologies, assessing clients' environmental risks and liabilities, working with clients in real estate, aviation, manufacturing, bunch of different industry groups. And about 6 months ago, I moved over to our professional services practice, dealing more with E&O and professional liability for contractors, owners, developers, architects, and engineers. I have a few Aon people on the call, so appreciate everyone that dialed in and given the support. And just a little broadly, in a brief overview of kind of what Aon and Great American do. So Aon acts as an insurance broker, it's sort of a middleman to different clients and different industry groups. And Great American Insurance is, the insurance company that underwrites the policies, takes the actual risk. And Aon, being the middleman, the broker, works with different clients in different industries to kind of facilitate their risk programs, their insurance programs, and help, go to different insurance markets that provide these environmental insurance products, Great American being one of them. So I'm going to hand it off to Sarah to start the first couple slides. But once again, appreciate everyone dialing in and looking forward to some of the great, environmental insurance overview we're going to provide today.
All right. So yeah, let's get right into it. What is environmental insurance? Basically, environmental insurance provides a wide range of coverage and protection for an insured's environmental risk and exposures. Coverage can include first and third parties, first party being the insured themselves, third party being pretty much anyone else, government, their neighbors. Coverage can also include cleanup and litigation costs being legal fees or really anything resulting from having to go to court over a claim. So environmental losses typically have to be related to bodily injury, physical damage, or cleanup costs. So bodily injury, think injury from a pollutant, physical damage, something like replacing material like a building, or cleanup costs, as a lot of us know, probably remediation. So environmental insurance policies vary a lot depending on the product, carrier, and underwriting decisions that go into them. And a lot of insureds that carry coverage nowadays are required to do so as part of compliance for their insurance requirements, but some do just get them just because they know that they need them. And what makes environmental insurance unique compared to other insurance lines is because the policy forms and language are written by the insurance carriers themselves, and they vary from carrier to carrier. Other lines like general liability, which is a very broad coverage over a company's, pretty much covers everything, or commercial auto, those use standard regulated forms most of the time and used by all markets. But by being able to manuscript and change the writing of the policy forms, it makes it a little easier for environmental markets to add and delete coverage where the underwriter sees fit. And it also allows us to be more creative with coverage depending on what an insured might need. Market capacity can exceed $200 million in limits for a single risk, so pretty high. And then even AM Best reported in 2018 that the environmental insurance industry paid out $146 billion in asbestos and environmental losses. So clearly there's definitely the need for environmental insurance in the industry. And we can go to the next slide, Finn. All right, so evolution of environmental insurance. Basically, environmental insurance started when the general liability, which I explained, the general liability carriers began applying a pollution exclusion from their policies. So since there was a gap in coverage and there was an exposure that needed to be filled, and that's pretty much how the market developed. To this day, most policies exclude pollution conditions, and an insured must purchase a separate pollution policy to have that coverage. You can go to the next slide. All right, so this is just a quick little timeline of how environmental insurance started. Previous to the 70s, pollution was covered by that GL form that I talked about. And the pollution excluded started in the 70s, 80s as the environmental regulations and cleanup began to rise and kind of take an important role in American society. So 1973 is when a pollution exclusion endorsement was adopted by that ISO general liability form, which began to be used on a lot of accounts, so much in fact that by 1984, the GL form completely eliminated pollution risks by adding it in exclusion straight to the policy form itself. In 1988, they gave back very minimum coverage by a hostile fire exception, but again, this coverage was so small, it really only related to fires, and clearly there's a ton of other exposures that can happen. So in 1986, AIG was the first carrier to notice this, that there was a gap, and they were the first carrier to present environmental insurance to the market. So that was in 1986, but today there's over 100 different environmental policies and carriers in the market. If you want to go to the next slide. Okay, so environmental insurance is not just limited to the US, it has a presence all over the world. For the most part, environmental insurance probably has the largest market in the US, just given the regulations and high litigation counts. But it's also pretty present in Australia, New Zealand, most of Europe, Canada, and even South Africa. And you can look at the map and you'll notice places like, for example, China or Mexico, they don't have as strong environmental laws in place. So the environmental insurance presence in a country can directly be correlated with the country's environmental regulations. So the market will continue to grow as developing nations tackle and develop environmental laws. Okay, so now I'm going to get more into current trends in the industry. The new trends in pollution conditions help drive the need for environmental insurance because things are always changing. There's always new regulations and cleanup that needs to happen. And this adds an element of risk and unknown. So for example, there's the emerging contaminant PFAS that I think most of us know about. That's a big concern currently in the industry. It's had a lot of talk because of what states will require for cleanup methods and just what are we going to do about it. So as a result, many carriers factor this into their underwriting decision and sometimes even exclude it. States like California, Washington, and Oregon are known for having especially strict laws and cleanup approaches. So a state's changes in screening levels can cause potential for remediation reopeners, and this can cause a big exposure for both the clients and insurance carriers, because then when they didn't think there was anything wrong with, there was maybe a closure before, and now it has to be cleaned up further. So, and then another hot topic is increased extreme weather events as a result of climate change. So natural events are increasing, and as a result, environmental exposures are also increasing. So for example, the more fires there are or hurricanes, there's going to be a direct correlation with the number of environmental claims. So for example, a hurricane can cause a damage to a tank, and that's going to cause a spill. So that in entail will increase losses. Also, mold is a huge driver in the environmental market right now, and a big reason why people are getting environmental insurance. Mold claims are at an all-time high in the industry, and as a result, a lot of carriers are mitigating their exposure with using higher deductibles or per room deductibles, depending on the industry, like hotels, or they're even just excluding it entirely. Other factors that impact the industry can be private environmental groups getting involved, as well as sophistication of lawyers and counsel that can manipulate the policy language to make it seem like there's coverage provided when there really wasn't any intent to by the underwriter. This can be a positive for the insured, but a negative for the insurance carrier, like Great American. Then if you want to go to the next slide.
Yep, I'll jump in here. Now we're going to talk a little bit about the main environmental insurance products that are offered by different insurance companies like Great American, pollution legal liability, and contractors pollution liability. Starting with pollution legal liability, we have a lot of acronyms in insurance, and we abbreviate that as PLL. And so the PLL provides protection for environmental risks stemming from owning a property or operating a facility. PLL can also serve as a strategic risk management mechanism by providing coverage to protect buyers and sellers from environmental liabilities associated with business transactions such as mergers, acquisitions, or divestitures. The pollution legal liability provides environmental coverage for losses and cleanup obligations due to on or off-site pollution conditions, transportation of waste material, and pollution resulting from owned or non-owned disposal sites, as well as legal defense costs associated with pollution conditions. Potential clientele for a PLL policy would include landowners, property managers, developers, manufacturers, banks and lenders, any type of company that has an ownership interest in a property that may have some type of environmental liabilities. Contractors pollution liability, the second product, CPL would be the abbreviation we use, provides protection for owners, developers, and contractors from environmental risk arising from their contracting operations or their activities. Some types of construction projects have higher environmental risks, such as development properties impacted by historical, industrial operations, or urban sites with uncharacterized fill is common. And from environmental firms, that remediate contaminated sites to general contractors who abate and demolish, older buildings. The CPL provides kind of a financing mechanism to respond to any type of environmental situation or exposure that would result from their operations. The CPL provides coverage for third-party bodily injury, property damage, cleanup costs, as well as defense costs, which arise from operations performed by or on behalf of the contractor. And something that's really important to note is that the contractor's pollution liability provides coverage for the name insurer or a contractor, in this case, for vicarious pollution liability. So downstream subcontractors doing work on behalf of a contractor, it provides pollution coverage for that general contractor in that case. Moving on, a little more detail and kind of to paint a picture of the pollution legal liability product. So the graphic kind of provides, a visual of some of the types of coverages that a pollution legal liability policy provides. Like we said before, on-site and off-site bodily injury or property damage caused by a pollution condition, as well as transportation of hazardous materials and, disposal of materials at a non-owned disposal site. If an insurer is transporting hazardous materials and there were to be a spill of those materials along the way that would cause damage to another person, a third party's property, there would be coverage under a pollution legal liability policy. Additionally, if some of those materials that the insured were dumping at a landfill or a non-owned disposal site were to leach into the soil or groundwater and it needs to be remediated years down the line, the pollution legal liability policy would also provide coverage for that. An interesting part of the pollution legal liability coverage grant is the timeline of the coverage. So as you can see on the bottom, we have unknown pre-existing pollution conditions, policy inception, and new pollution conditions. So insurers will either provide coverage for one or the other or both, depending on the amount of information available. This means kind of an insurance company will provide coverage for potential environmental conditions that may arise in the future emanating from historic pollution at a location. So let's say an entity buys a manufacturing facility that historically they were dumping materials on site, hazardous materials that contaminated soil or groundwater. As long as those are unknown to an insurance company, they will underwrite, and as long as they have environmental reports, they will underwrite to that risk and determine what coverages will be granted, but they can provide coverage for pre-existing liabilities. So not just from acquisition date forward, but in the past, previous environmental liabilities, which is a really important, at least we think, coverage for our clients when they have potential, when they're acquiring or working on locations that have potential pre-existing environmental liabilities. Like I said before, in order to provide coverage for these pre-existing liabilities, insurance companies will require environmental reports. So phase 1 or phase 2 reports in order to underwrite to these, historic environmental risks on the property. If there's a historical pollution noted in the environmental reports, recognized environmental conditions, something along those lines, most insurance companies will underwrite and exclude that risk, as they're only willing to provide coverage for unknown risks, similar to the analogy that you can't buy insurance on a house that's on fire. Same way here, you really can't insure something that's already polluted, and insurance companies don't want to be on the hook for that. For the contractor's pollution liability, it's a little bit more straightforward in terms of the underwriting that goes into the product and coverages provided. As we said before, the policy provides coverage for any contracting activities done by or on behalf of a contractor. We deal a good bit with, general contractors that handle large infrastructure projects such as roads, tunnels, and bridges, but also work with a number of environmental contractors and consultants who are in the field, probably like many of you, doing testing and remediation work. For contractors, some of their main concerns regarding the pollution exposures are starting excavation on a job site and finding contaminated soil or contaminated fill that they, now it's their responsibility and they need to dispose of properly and clean it, or the presence of lead-based paint or asbestos when doing construction on buildings that are, partially occupied, that could have the potential to cause a bodily injury claims to one of the residents in that building. As Sarah noted, there's been an uptick in claims for mold recently, and it's a big concern for at least, our contractor clients see it as a pretty big concern. An example of this would be a trade contractor installing an HVAC unit incorrectly, and it leaks and causes mold damage to an entire apartment complex, something that's a, serious, substantial claim, and it could cause, a lot of damages. So that's something that is really important that the contractor's pollution liability policy provides coverage for. As you can note in the slide, there are a few different ways to procure the coverage. It's available on a practice or project-specific basis. Practice meaning, for all of a contractor's operations over the course of a year, they buy a policy and that policy covers all their operations over that course. Project-specific meaning sometimes certain contractors, are required by an owner to purchase dedicated insurance limits for a certain project due to the size or scope or risk associated with that project. It might be higher environmental risk, so they're required to procure a project-specific placement or policy, but it can be procured either on a practice or project-specific basis.
Hey Vin, it looks like we have a couple of questions, so this might be a good time to take a break and answer them.
Yeah, go ahead.
Yeah,
You want to
so
read them off?
the first one is from Ante, if I'm saying that correctly. What, if any, impact has COVID had on the insurance industry specific to pollution? How broad is the definition of a pollutant? And would communicable disease be considered an insurable event under a pollution policy?
Sounds like a question from another insurance guy, but yeah, no, it's a good question. And when COVID-19 started, there were huge questions in the insurance industry if COVID-19 was an insurable loss cost associated with required PPE or other things. But it's, for the most part, from what we've seen in the environmental space, is a lot of these insurance policies or environmental insurance policies were not underwritten to cover communicable disease or something like COVID. And so a lot of them either had communicable disease exclusions or were kind of silent on the matter. And we've seen a lot of our insureds or our clients respond saying, we believe, a communicable disease is a potential pollutant of sorts. And so it's been interesting back and forth. Unfortunately, we haven't seen any insurance companies provide coverage or pay out any claims for COVID-19 so far. But it is interesting to kind of go through, and as Sarah detailed, each form for different insurance companies are manuscripts in the environmental space. So each one's different. So it requires kind of going through each one side by side and seeing what their stance is on communicable disease. But it's also changed in the marketplace and caused some insurance companies to create specific COVID-19 or communicable disease exclusion. So where there wasn't an exclusion prior due to COVID, it started to become a thing, and we've seen it more frequently on insurance renewals or new placements where insurance companies are mandating this exclusion. So they specifically call out that they're not providing coverage for it. I hope that answered the question.
Yeah, I think that was a good summary. And from our end too, haven't really seen COVID hit pollution policies too much in the industry. So it's good for us, I guess. And then the next question is from Jonathan. When acquiring coverage for an unknown pre-existing conditions, is that a one-time coverage purchase, or is the coverage only in place for the term of the policy?
That's a good question. I mean, do you want to answer that, or you want me to take it? It's up to you.
Yeah, I don't mind answering it. So I think in this case, that would kind of go down to what type of policy is in place. Usually it would depend on the type of product and also if the policy is claims made versus occurrence. And I'll do my best try in explaining what those are. But basically, occurrence would be anything that if the pollution condition happened during that policy term, and that kind of goes on for forever. But if it's a claims made policy, the coverage has to be in place, and the insured has to continue to carry pollution insurance if they want to submit a claim. And I think that answers the question. Vin, do you have anything to add to that?
Yeah, just to clarify the occurrence versus claims made, and I don't want to get too confusing because I mean, this kind of was confusing to me at first, but if for an occurrence-based policy, if a claim occurs during that policy period, it applies to the specific policy period. It happened doesn't matter when it's reported or when it's discovered, whereas a claims made policy, if the claim, when the claim is made, let's say the negligent act or something happened 5 years prior, but it wasn't reported until today, it applies to the policy period in force today, not to when the occurrence happened, which would be the occurrence base. So it's two different types of policy coverage triggers. Somewhat confusing. We can clarify that a little later if we want to go through, but that discussion could take like a whole hour. So
yeah. Oops, it looks like I skipped a question. It says, are you aware of any insurers rating RCRA TS DF accidental occurrence insurance coverage required by 40 CFR? And there's more. I don't personally know what that means. Vin, do you? I think that might be a better broker type question, see what's out in the market.
Yeah, I mean, if we want, if we can leave, that's in the chat box, right? So we can probably leave that towards the end, and I'll read the actual question. I didn't hear exactly what it was saying, but if we don't mind, we can leave that to the end, and I'll try to come up with a response as best as I can to that.
Okay, and one more, since these just keep popping up. How does premise pollution liability differ from the others you mentioned?
So you mean okay? So site pollution or premise pollution liability, like we said, is more for someone that has an ownership interest in a property or in a location, and that's tied to pollution conditions on, at, or emanating from that location. Whereas the other type, contractors pollution liability, is tied to a contractor's operation. So if a contractor were to cause a pollution condition, a spill, something that contaminated the soil or groundwater, that's how the two differ in coverage. One's kind of a client has an ownership interest versus one that's doing actual operation. So those are the two main differences between a site pollution or pollution liability and contractors pollution liability.
Okay, and I think that's a good segue into the next slide.
Yep, and so that was great. Thanks for all the questions. Appreciate it. Those are awesome questions. So we can move on to how is coverage triggered. So people buy insurance, and claims is what sells the insurance, right? Is the idea that an insurance carrier is going to pay for a claim when it's made. And as you can see, we took some policy language here, define what claim and environmental law means. So triggering coverage for either pollution legal liability or contractors pollution liability policy, means kind of with a claim being made by the insured to the insurance company. So this usually stems from the insured receiving a complaint or demand from a third party. Often the demand comes from state government or local EPA. And as you can see, most policies, here in the slide provide a definition of environmental laws. And if the insurance company, if the insured, let's say the client in this case, is in violation of these environmental laws, a complaint or suit is usually filed, and that's when the insured or the client notifies their insurance company to move forward with the claims handling process. The insurance company requests a bunch of information regarding the complaint or suit being filed against the insured or client, and has an internal claims staff. Usually, most insurance companies have internal claims staff that will decide how the policy will respond, whether the pollution condition that has arisen is within the terms of the policy and the policy will pay for the claim, or if there's exclusions and only part of the policy will respond and pay for a certain amount of that claim or suit being filed. And then that's kind of the value of having a broker, a middleman, as well as we help our clients report claims to, or come up with information to report claims to insurance companies. And we facilitate with the claims handling. So each claim gets assigned a claims adjuster from an insurance company. And we work with our clients to help facilitate and help them understand what is covered, what is not, and why. And the next slide, it's something we hear all the time pretty frequently, is that, companies claim that they don't have an environmental exposure. And although there are certain industries that have higher environmental exposures than others, such as the chemical manufacturer or environmental contractor conducting remediation work, almost any company or industry has, quote unquote, an environmental exposure. The traditional thinking is that pollution losses or environmental losses were only a severity issue and they didn't occur frequently, so it wasn't a big concern. But in the past 5 years, we've really seen a large uptick in both frequency and severity of these environmental claims. And in the next few slides, we're going to go through, kind of run through the industries that have potential environmental exposures, and that we've seen industries that Sarah and I work with frequently, different clientele, and some that are less obvious than others that that have environmental exposures and are at risk, even though they think they might not be traditionally. Oops, sorry, I went backwards. So to start off, talking about commercial buildings, so your offices, hotels, hospitality, casinos, they're much longer list, but those are the ones we kind of picked out. And some of the main environmental liability concerns include mold growth resulting from water intrusion, severe weather events like Sarah mentioned, improper drainage, broken piping, etc. Biological agents, including Legionnaire's disease and other bacterial contamination. Legacy environmental issues from historic operations and failure to accurately and adequately screen these properties. So when a company is purchasing another location if they, if it was historically an old manufacturing plant where they dumped whatever in the soil and it got into the groundwater, something along those lines, they didn't do proper soil testing or environmental reports in that case. Off-site contamination migrating onto a property. So we call this pass-through pollution. It's actually interesting. So, although you might own or operate a property, it might be next to a manufacturing plant that has some type of pollutant leaching onto your property. Although you didn't cause it, you own and operate the property, so you're responsible for that pollution if it creates a claim or a suit regarding your office, hotel, casino, etc. So it's that's something that the policy would provide coverage for, but it's a big exposure, we think, as well as PCB and mercury containing electrical equipment. So older buildings that have older electrical systems and are concerned with PCBs or mercury on with their equipment, and they're doing a renovation, that type of thing. It's important. It's a big exposure for some of these commercial buildings. Retail properties would be the next one. So, we have this is a higher class of environmental risk as an insurance company would assess. We talk about dry cleaners and gas stations with potential, improper disposal of harmful chemicals or waste at their locations. Seepage of harmful chemicals from above or underground storage tanks. And I know Sarah touched on some of these storage tanks, but if a tank is underground without proper tank tightness tests, sometimes it's hard to tell if it's leaking. Above ground storage tanks, a little more obvious, but there's any type of chemical, whether even if it's fuel like gasoline on or at a location is an exposure. Mold growth, again, in retail properties. I know COVID's caused, they'll shut down a lot of these locations, but there's still that idea that, an HVAC contractor or you made a maintenance error, there's a maintenance error caused, release of airborne bacteria or mold buildup, in addition to, mold resulting from water intrusion or moisture encapsulation. So it's a big exposure for anyone that is, going to one of these retail properties, potential bodily injury claim and property damage for that actual, the owned property. And then asbestos and lead-based paint. So buildings built prior to 1980, disruption of these material, whether they're doing a retrofit of the property or something like that, that's a big exposure as well. And we also have redevelopment sites. So this falls under more on the construction, the contractor side. Some of the concerns that they might have are failure to properly locate pipelines or utilities when they're digging or doing some excavation work, fumes and emissions and spills from chemicals, some volatile organic compounds applied during construction. So you think finishers, sealants, curing compounds, floor coatings, adhesives, the list goes on, that could cause, respiratory hazards for third parties or even the construction workers on site. Like we said, inadvertent disturbance of pre-existing contamination or product. If the facility is an older facility or, an old manufacturing facility, for example, there's that concern as well. Asbestos is also another concern, whether we're doing a retrofit and disturbing asbestos in older buildings, lead-based paint. That's obviously a large concern that many, contractors doing or working on redevelopment sites have. And, another big one we see is using supposedly clean fill from unknown origin. So finding out, at a later date that although the fill they thought was clean is actually not and was contaminated, having to go take that back up, clean it, bring in new fill. It's obviously pretty costly. So there are a couple other, scenarios for redevelopment sites, but those are probably the main ones that we see of concern. And I'm going to pass it along to Sarah for the next few slides.
Okay, so I'll start with warehouses. So products stored at the warehouses can be a big exposure depending on what they have in the warehouse. For example, chemicals stored, if they're hazardous, can be released into the ground or cause BI or bodily injury conditions. So that's probably one of the bigger exposures there, but also if there's a fire, the pollutants can get into the air. And it could also trigger business interruption coverage if the warehouse has to shut down because of the pollution condition and they're not able to gain any profit during that time. That's another pretty big thing you see with warehouses. Also, for self-storage warehouses, they have a pretty high likelihood for illicit abandonment. So someone abandons pollutants there, either from outside contaminants being brought to the facility or abandoned contaminants within a unit that leaves the product classification and disposal to the facility owner. We can go to next slide. Oh, there we go. Manufacturing, probably one of like the things you think of when you think of pollution coverage, but they have a high pollution exposure because they tend to use a lot of chemicals and they're stored on site. Those can be released, or even if they're not released at a later date, be defined as an emerging pollutant. So maybe down the line, you find out that something that's being manufactured causes cancer or something, that's not good, and that could trigger even product pollution coverage. Similar to other industries, manufacturing facilities can be susceptible to fires, air emission conditions, and they have to worry about hazardous waste disposal. And also manufacturing properties tend to have a very long history. They usually have been manufacturing plants for numerous years, and that leaves a big risk for historical contamination if there hasn't been any look on site of phase 1 or anything. You don't really know what's in the ground there. And that can be a third-party concern as well if anything migrates off-site into a neighbor facility.
Sorry, that's the right one, right?
Yes, this one, I
Okay.
think. What is this, 18? Okay, yeah, so okay, now we're gonna get into specific claim examples and how they can apply for some of the industries we discussed. So this is an example of a distribution facility. Basically, some people broke into a chemical distribution facility. They vandalized the property, they broke into the building, but while they did that, a valve on a 10,000-gallon tank was damaged. The damage to the valve caused the tank to leak, but it wasn't discovered until Monday morning when some employees came onto the site. So the contents from the containment area had to be removed, and environmental officials even required subsurface testing of soil and groundwater just to be safe. So the total cost for this specific claim example reached $90,000. So this claim resulted from an unknown source illegally placing hazardous liquid into a dumpster at a manufacturing facility. The container that the liquid was in leaked and contaminated the entire content of the container and then eventually the floor of the transfer station. And between legal and cleanup fees, the loss was over $150,000. I think this claim is a pretty good example showing that an insured can be liable for a pollution condition that they didn't necessarily directly cause. This was someone coming onto their property and causing a pollution condition, yet the insured was still responsible for this cleanup. And if they didn't have this coverage in place, they would have lost out on $150,000. So this one's one of my favorite examples. So there was a night fire at a warehouse facility that caused a lot of heavy smoke, which settled over to a nearby residential community. It was later discovered that hazardous materials were stored at the warehouse, and then that the vapors from the fire could potentially cause a health hazard. So the residents of the nearby community were told to stay inside. And while they were doing that, the fire responders set up a containment area or containment to capture the runoff water used to put out the fire. Air monitoring also needed to be conducted to see if the air quality was safe. The fire was eventually extinguished, but testing confirmed that there was contamination in the soil beneath and around the warehouse. So this required cleanup. There's also multiple third-party claims from those residents nearby alleging bodily injury from inhaling the toxic fumes from the fire. So in this example, it's very easy for defense costs alone to get over $1 million because you're worrying about there's multiple parties involved. There's going to be a whole bunch of court fees. So this one can easily rack up well over $1 million. Okay, so for this one, a highly concentrated acid was in a storage container. The storage container overheated during a thunderstorm. Because of the thunderstorm, responders were unable to get to the tank because of the severe weather. They didn't want to risk themselves going outside and standing next to a steel tank while there's lightning coming down, which is totally understandable. But so the tank ended up rupturing, which caused a release in the acid. And still, until the weather was acceptable to be out in the elements, they weren't able to contain the spill. By the time the responders were finally able to initiate containment, there was significant contamination released into the ground at the property, but also to the adjacent property. So the insured was, in this case, responsible for both on-site cleanup and off-site remediation. Okay, so this one's a fun one because it's maybe an industry that you don't necessarily think of a huge environmental exposure. So it's a grocery store, and there were fumes detected in the basement of the grocery store by an employee. It turned out that there was PCE that migrated from an offsite dry cleaner, and that was the source of the fumes. Although the offsite dry cleaner was labeled the source of the condition, the dry cleaner did not have enough money to cover the cleanup costs. So the state ended up requiring the impacted property to install groundwater monitoring and vapor treatment. But again, since the source didn't have the funding, the grocery store was entirely responsible for the costs.
And I think I'm going to take over here. So we want to touch on a few other claim examples. Hotel being, one that's unfortunately relatively common. Being it mold or Legionella in this specific case. Whenever you stay at a hotel, you're concerned about if the sheets are clean or if the room's contaminated, especially now with COVID. We're thinking about that all the time. And in this specific claim example, an individual stayed at the hotel, became sick because there was Legionella in the shower head. And although many larger hotel chains have environmental risk management, environmental health and safety procedures that would make sure they test their appliances and water quality pretty frequently to make sure they weren't causing any bodily injury to any of the people that were staying at the hotel. Some smaller hotel chains, don't take these extra precautions, take this extra money to spend on this testing, and they're on the hook for this type of bodily injury claim. Similar to some of the other examples Sarah mentioned, these can be long, drawn-out battles with court due to Legionella causing respiratory infections, and the hotel chain being a smaller one is on the hook for potentially millions of dollars to pay for medical bills, legal fees, and the list goes on. So that was just an example for a hotel. This is a really interesting one. It's about a hog farm, and the pollutant in this case is an odor. So a large number of environmental claims, for the most part, are a result of a chemical spill, something you can point to and is visible and obvious. But in this case, the plaintiffs filed a suit against a local hog farm that was their next door neighbor, because of recurrent odors and pests emanating from the hog farm. And it caused significant damages to the owners, not only bodily injury, they were getting sick because of the smell, the pests were coming over, eating their crops, just making their property, invaluable. And that's something that, that's another big factor, right? So let's say you have this odor problem, you want to move, and no one's going to buy your house because they come to the property and they say, they can't stand the smell and it's diminution in value of your property. That's another, example where an insurance policy potentially pay out for that. But in this case, pretty sizable is a $50 million claim payout from the hog farm to the neighbors, to the neighboring properties for all the damage they did, whether it be bodily injury as well as damage to their property. It's more of an indirect pollutant as it's an odor, and it's a weird case, but it's actually kind of interesting that that the courts ruled in this way. Wood frame construction, it's an interesting claim example. It's like obviously on the contractor side, as discussed previously, a big concern for contractors is mold, and we've seen an uptick in contractors reporting mold claims, but especially in high-risk areas where there's tropical storms and tropical areas where there's frequent inclement weather. Hurricanes, and contractors need to be worried about properly securing the job site. And in a contractor's contract, it usually specifies that their liability or their responsibility to secure a job site, even if it rains, if there's a hurricane, And so, people are paying a premium to live at a facility like this. And in this case, they were able to detect some of the mold coming out, prior to putting up the walls at this facility. But as you can see, and as you can think, if this had gone unnoticed and residents had moved in, it's likely it was a nice building. So some of the more if it's a high-end building, some of the wealthier residents are not going to accept this, being a thing. So they're going to sue, and they're going to bring charges against the complex for potential bodily injury caused by mold, as well as property damage if they own, the condo or the apartment in this case. And in this case, it was about $500,000, pretty significant in damages to address the remediation of the mold growth. And then our last claim example is another interesting one, piping infrastructure issue, something we don't see too frequently, but we have seen other examples, whether it be oil spills in the Gulf of Mexico in the past 10 years or oil spills in bodies of water. And in this case, there was discharge from corroded pipes at a port. The owner of the port was responsible for making sure that these pipes were properly maintained and the pipes were leaking into the ocean. Notices were sent by the EPA and Coast Guard regarding violation of environmental law and their operations causing a pollution condition. Numerous issues from the discharge, as you can imagine, significant natural resources damage, to clean up the surrounding area, potential fish kill. It's a huge exposure and it's a huge issue in this case. And then significant costs to clean up and obviously maintain and move kind of the piping system in this case. So, in this case, the owner had to totally, take an 18-month amount of time to relocate the pipes, make sure they were new and weren't leaking, as well as, the port was closed during this whole time. So Sarah touched on business interruption costs. The port's not making any money, so it's a huge concern. It's an ongoing project, but they're not allowed to have ships come into port while they're cleaning up. So it's just a constant disturbance that is a huge, exposure for the owner in this case. So, just another, varying example, claim example. And I believe that's the last claim example. So we're going to open it up here to, further Q&A. I know you had some good questions earlier, but we wanted to just kind of open it up. And I think, Jackson, if you can unmute everyone, or if you want to unmute yourself, if you have a question, if you want to ask, or if you want to type it in the chat box, that would be awesome.
And there are a couple more questions that came up then while you were talking. To go back to Jonathan, your original question, it was like a specific insurance coverage requirement. I ended up looking it up while Vin was presenting, and it looks like that specific requirement is related to hazardous waste facilities and disposal. So actually, to answer your question, I would say most insurance carriers give coverage for non-owned disposals. I know we do pretty much always, unless it's a pretty big issue. So yes, a lot of carriers do give that, are able to meet those requirements.
John, did you want to follow up on that? Do you want to clarify it or anything? Feel free to unmute yourself.
Yeah, no, I not really follow up. It's a fairly specific, little used kind of insurance, and just wondering if there are any known carriers that cover that. Not a lot of people make use of that under that CFR provision, but I can follow up afterwards. Thank you.
Mm-hmm. It looks like we also have a question. Is mold usually covered under the contractors' policies or also by the site policies? And the answer to that is both. Both the contractor's pollution policy and site policy can cover mold.
Yeah, and it depends. And the landscape, I'd say, for that coverage is definitely changing. It's a big exposure, and different insurance companies are evaluating it differently. So on a contractor's policy, pretty broadly offered that mold coverage due to their operations, and that's usually not restricted. I'd say on a site pollution policy, the appetite from insurance companies for mold coverage is changing. Whether it'll be subject, mold will be subject to a higher deductible, or they will not provide as high insurance limits. So you could have a policy for a $5 million limit, and they will sub-limit coverage for mold to $1 million or less. And it's a changing environment always, but I mean, there are so many different insurance carriers in the marketplace that do different things. So you can almost always procure coverage for it, but it's always changing. So it's a good question.
And then this other question, do you have any examples of claims related to climate change and how those were dealt with? Is this a topic of discussion in your field? I would say it is a pretty big topic in the field. I've been to a lot of presentations, and it is something that comes up, especially as we talked about the bad weather. I can't think of any direct claim examples. Finn, can you?
No, and it's harder to, I've had this conversation with different people, whether it's in the construction industry, owners, and people talk about, well, climate change is going to cause a claim, an environmental claim, quote unquote, but there isn't any, I wouldn't say there's any coverage. There's no insurance policy to cover, damages due to climate change. Although some of these policies might cover some of the, the fallouts from climate change, like increased hurricane storms that cause mold, things like that. But there's no insurance policy that would cover, resulting, I guess, issues, or would provide coverage for climate change. So it's an interesting topic. We have that discussion with our insurers all the time, or in our clients, but there's no insurance product to, provide that coverage yet. So it's kind of interesting, but it's everything's changing, and we see new solutions coming out every day. So yeah, it's definitely interesting.
Okay, another question. I don't think any of the case examples touched on lead-based paint or asbestos. Can you think of any that you could share?
Yeah, I mean, I can definitely touch on a few. When let's say, for example, there are, older buildings, city housing, let's say, that were built prior to 1980, a contractor goes in and says, we're going to do a retrofit or redevelopment of X number of floors in the building while the building's being occupied. And we've seen in different examples, while the contractor was doing, whether it was any of their construction work, either they didn't realize there was lead-based paint or asbestos within the building that they disturbed, and they did, and it caused the residents to have to relocate for a certain amount of time while they had that asbestos and lead-based paint abated. And that's obviously a huge cost and concern, and we've seen that sometimes. I've seen it on like a different stadium project. So whether it's like a basketball or old kind of facility, mostly obviously with older construction, doing, renovations or any type of that work that could cause either the workers, so like general contractors, workers, to, have a bodily injury claim due to like inhalation of, asbestos fibers or something like that. That's kind of the scenario we'd find in asbestos or lead-based paint claims.
Does anyone else have any questions? You can either type it in the chat or unmute yourselves, whatever you prefer.
I have a quick follow-on to that question about the lead-based paint or asbestos. If the issue is not that like there has been a bodily injury or like there's a claim from that sense, but it's more of an issue of the materials have been discovered and then they need to be abated to prevent any injury, is that something that would be a claimable event?
Sherry, you want to take that one, or do you want me to?
Yeah, sure. No, I can take it. Yeah, that would be covered because if it was found in the materials, then yeah, that is technically a pollution condition. And also, depending on the insurance policy, they could handle it differently, but a lot have different sections where they're trying to mitigate any potential claims down the road. So from an insurance carrier's perspective, if they go into that for example, that place and they're taking out the asbestos, that's going to prevent them from having third-party claims for BI down the road. So they do actually want to go in and clean that up. So yeah, that would be covered most of the time.
Thank you.
I don't think we have any more questions in the chat box, but if anyone else has any questions, you want to unmute your phone, that'd be great. If not, I just wanted to say once again, kind of thank you to everyone, Jackson and the EBC, Christina and Sarah, and everyone that helped put this program together, as well as everyone that jumped in to attend. Obviously, everyone's fatigued and goes on a million Zoom meetings, so I appreciate you taking an hour out of your day to spend with us and learn a little bit more about the risk side of environmental. And yeah, it's awesome to see everyone.
Yeah, thank you everyone for joining. It's good to be able to get our environmental insurance nerd out and talk about all these things.
Yeah.